Great. Today we have Mike Wright, and I can remember everything I said, but our frequent face here in the meeting, money man aficionado. He has been working with small businesses, monies, tax liability for decades. And so it'd be an understatement to say that Mike is an expert in this field. So we are super excited to have you. I know I've been very much looking forward to this, Mike, because cash flow, money management, is such a huge thing. And just what I've experienced with contractors, with any business, right? Money makes or breaks it. You're a business when you're making money, right? So looking forward to seeing what gems we can pull out. But I wanted to start by giving you the floor and just letting you tell us, what do you feel like are some key points that if you could get in front of every contractor in the world and tell them to abide by these things, what would they be?
First thing I tell them is show up for your appointments. Now, having said that, I will apologize to you. I had a really nasty cold over the weekend, snotty head and the whole bit. So you may still hear me sounding a little froggy and I may sniffle some. So I just wanted to get that apology out of the way at the beginning. So having said that, the reason I made the joke about showing up for your appointments is I used to be an insurance auditor. For 30 years, I audited small businesses almost exclusively in southwestern Indiana. And the company that I worked for loved small contractors. So I always had a lot of those appointments to make. And the second thing that I could tell, and with Jeremy at the coffee shop, it still is true. If I couldn't find them at their office, I'd find them in whatever coffee shop was open in the whole town. And a lot of times I could walk in, this is literally true, I could walk into the coffee shop and say, I'm Mike Wright, I'm here to do an audit, and 2 or 3 people would raise their hands and say, can we get together, and we get stuff going. So I have a lot of experience and a love for contractors. The one thing that is, if I have a message to carry, it is this. Money is the most important thing for a business. I know that sounds greedy. I know that sounds not politically correct. But if you don't have money in your business, you're not going to be able to keep your business going. And that's really true for a contractor, because contractors have the situation where they have to spend money up front in order to even be able to start doing the thing that they're going to get paid to do. And that's why we have the tradition with jobs like that, pay half up front and the rest when it's done. But the half that they get up front likely is just barely going to cover their materials costs and perhaps the costs they already have for employees. For any business, it's the same thing as expansion for any other business, because you have to put the money out there up front. I'm glad Edie mentioned the cash flow thing, because cash is also the important thing. Money can come in a variety of forms. It can come in the form of credit. It can come in the form of loans. It can also come in the form of cash. And the more you can operate with your cash, the better off you are for a variety of reasons. Lots of things are running through my head right now because I did read this past week that credit card debt has reached a new high. And people are spending money right and left. And the reason they're spending money is because they have credit cards. And I've talked to so many contractors, both when I was doing audits and now that I'm working with clients that are in business, that have attempted to use their credit cards as a way to finance their business. Very few of them are successful at that. They end up being in debt or bankrupt or whatever. So that's kind of why Edie and I had this conversation when we first met, because I started talking about a cash management system that I think is very useful, especially for contractors. Didn't say it's easy, but I said it's useful. And so part of what I like to teach my clients is the use of the Profit First system. I don't know if you've heard of Profit First, I see Jeremy smiling. He apparently has. Either that or somebody off camera told him a joke. I'm not sure which. But if you know what Profit First is, you know what I'm talking about. Look, I'm an accountant. Other than audits, when I started doing taxes, I learned more and more about accounting than I ever learned in school. And I'm also an enrolled agent, which means that I work with people and represent them before the IRS. So I have all of this experience in dealing with these issues. And the other reason that I like Profit First is that while I can give you a good explanation of this or that, well, let me tell a story. I'll do this real quick and then we can go on to wherever Edie wants to go. I was talking with a client once and we just gone over their financials and he said, Mike, can I ask you a question? And I said, sure. And he said, you tell me here that I made a small profit last quarter. And I said, yeah, that's true. He said, then why is my checking account overdrawn? And I started giving him the good accountant's explanations about balance sheets versus profit and loss and all these kinds of things. But I saw his eyes glaze over as I was doing that. And I realized then what I was saying was not understandable and it didn't solve his problem. His problem was his bank account was overdrawn. So that was the key that told me I needed to find something else. And as it happened, you probably all know the old saying, when the student is ready, the teacher appears. Well, the book Profit First came before me at just about that same time. And I literally devoured it straight through in one sitting. And I thought that this is the answer. Now, there's some implementation issues, but it actually deals with the problem that he was talking about. I guess I'm going to tell one other story. I have a friend. I never was able to make him a client, unfortunately, but he and I talked business a lot. He's since sold his business because he's been successful at it. He worked with a partner, and he said his partner was always coming to him and saying, oh, we need to buy this new truck. We've got $50,000 in the bank account. Let's just buy it. Oh, we need this new that, or we need to sign up for this. And he always said we had this much money in the bank account so we could do it. And my friend who was watching the money would say, well, maybe so, but next week we have to do payroll, or the week after that we have a rent payment due, or whatever it was. He was keeping track of what was going on. Well, Profit First makes that problem easier to deal with because you allocate the funds that you need in the areas that they're absolutely necessary, like for taxes and like for payroll. And then whatever's left is your operating funds. So now instead of having $50,000 to get excited about spending, maybe you've only got $10,000 to get excited about spending. Now you still got $10,000 and you might still get excited about spending it. And that new computer system might be just crying to you to buy it. But you know that even if you do that, you've still got your payroll covered, you've got your taxes covered, and you've got the things covered. I've heard people make jokes about this and say this is just, and now I can't remember his name. This is just Dave Ramsey's envelopes in bank accounts. And I say, yeah, so what's the problem? It accomplishes the same goal. I know that General Motors cannot operate on a Profit First system. I call a business, General Motors is not what I call a real business because they operate on cash flow. They operate on borrowing money and paying off that loan with another loan. And oh yeah, they make some cars in the meantime, but mostly they're moving money around. Well, you and I have what I call a real business. You actually do something. And if you do have to go borrow money, you expect to pay it back. You don't expect to borrow more money to pay back what you borrowed. That constraint of trying to really do something and not just play with money is also one of the big advantages to Profit First. Because as you look at your bank, well, I guess I should say, Jeremy knows what it is. Maybe Johnny doesn't. I know Edie does, and I'm not sure about Chloe.
I'm actually looking it up right now online.
Okay. Basically what it is, you have a minimum of 5 bank accounts. You have one account for your income. That's where all the money goes into. You have one account for your profit. Yes, we call it profit first because we take profit out at the very beginning. You have another account for your taxes, and you have a fourth account for your payroll, and you finally have your operating account. And so twice a month, you look at how much money is in your income account, and you divvy it up into those other four accounts based upon predetermined percentages. So now when you look at your account, when you open your online banking thing every morning, you can see exactly what's in all those accounts, and you can see what's going on. And while at the very beginning, you're just operating based upon what somebody has told you you should do, as you go through this process of evaluating month after month and year after year, you begin to see where your business is different and how you want to move your business. And now you can use those funds to those percentages that you allocate. You can change them to match with your business. Excuse me. So, I mean, that's it in a nutshell. Everybody that I've worked with that has gone on Profit First and stuck with it, look, I can't take over their business for them. I can explain it to them. I can help them set it up. I can review it with them. But many folks end up just kind of going their own way. However, one thing I do insist on, and I don't know if you guys have employees, but one thing I do insist on is that they at least have a separate bank account for their payroll. Because you don't want, if things go south and you can't make a payroll, you don't want the government getting into your other accounts at the beginning, because that's the money you're going to work with. I had a client just recently that was hit by the IRS that way, or not the IRS, it's state of Indiana, actually. And we couldn't get around it because her money was all tied up in her accounts. And we couldn't get the money to get out around it and get ahead of what she owed so that the levy would go away. That's another reason to have more than one account, even if you're not faithfully being a Profit First fan. My brain is working, so I'm going down a path here, so I'm going to stop. This is the nutshell of what I try to do for people. The other thing that I also do, I'm a big advocate of setting your business up as an S Corp. I can give you some reasons if you're interested, but what it will do is it will minimize the self-employment tax you have to pay. Now, if Johnny's in Toronto, I have no idea how this works in Canada. So it may or may not be good advice in Canada. But if you're in the US, almost every business I know of benefits by being organized as an S Corp, or at least being taxed as though they were an S Corp. There are some particular differences that make that not possible. There are some things that you can do in business that you're not allowed to be an S Corp. If you know anybody that's doing not-for-profit, a not-for-profit can't be an S Corp. It has to be a C Corp. And look, guys, I like Profit First, but I'm also just a real fan of taxes. And I can bend your ear about the theory of taxes all day long if you want. We'd have to go get coffee, though, if we did that. But anyway, okay, I really am going to stop now. Back to you, Flo.
Flo has something. She's more than welcome. Jeremy, I am curious about what your experience with Profit First has been.
Yeah, so I read Profit First probably 3 years ago. No, maybe 4 years ago.
Oh, wow. Okay.
And when I went out on my own in 2021, I did not implement Profit First. And year one, I thought, I'm not even going to make enough money to survive. Like, let me just scramble and get everything done. And I did okay. We made it out. But then I started leaning on credit cards to support, my income. Last year would have been a great time to implement Profit First. What did I do? I said, I'll get to it later. And guess what? Now I don't have the money to pay those taxes. And so I'm kicking myself for not following Mike's advice that I knew years ago.
Yeah.
And so I'm literally going to the bank this morning to set it up because my accountant is or my CPA has told me like, hey, you need to switch over to an S corp, and then like knowing that like if I'm gonna do this right, I need to go set up those other accounts. And I've like toyed around with the idea of using envelopes like the Dave Ramsey envelopes to set up those different accounts, but I'm just going to do it right. I'm just going to go to the bank this morning because I've got some cash to deposit anyway. And that literally, like, I've got a $1,500 deposit on a project just rolled in this morning. And I'm like, it's going to be the first one. I'm doing it.
Yeah.
So this is perfect timing.
Can I interrupt and ask a question? Have you already set up your S corp or set up your presence as an S corp?
That's a good question. I don't know what all is entailed.
Well, the
but-
reason I'm saying that is this. If you already have bank account, if you go starting more bank accounts and then you turn around and set up an S corp, and then you're going to have to get more bank accounts because you can't transfer the money from a non-corporation to a corporation. So if you're giving serious thought about setting up the S corp, keep the check in your pocket for a day.
Okay.
Because you can get the thing set up in a day, and then you'll be in better shape to do that. It'll save you a world of trouble later on. Because I've done that. I've worked with people, and then I've convinced them to go with the S corp, and we went to set that up, and it just look. It's not impossible. It's just a lot of details to have to be kept in a row while you're doing it. I had
perfect.
that.
I
take her over.
Paperwork sitting in front of me underneath all.
We lost
We
him.
lose him.
That's Johnny. Yeah.
He'll come back. No, not this time. It's not me.
You're like crystal clear, audio clear, everything clear.
I solved my problem.
There you go. Oh no. Sounded like you're saying. Okay, go ahead.
Yeah, no, it's very interesting. Like I know a lot of contractors, struggle to profit is an evil word, like they're afraid to talk about profit or explain profit to their customers, and they're barely covering their wages when they're pricing. And we're talking about the smaller solopreneur type contractors.
Yeah,
they represent a larger part of the industry. Welcome back, Jeremy. You kind of took over there. I mean, like mindset here, Mike. How can we frame this to the the smaller contractors and get them in the right mindset to even budget for profit? Because I'm not entirely sure that they understand, materials plus wages plus profit, and that seems to be, something that most of these smaller contractors don't even go there. They think they're budgeting profit, but they're not. They confuse profit with their wages.
That's true. And that's also one of the reasons for the S corp setup, because then again, at least when you talk about the wages for the owner of a business in the US, if it's a corporation, they're really wages. If it's in the other kind of organization, proprietorship or partnership, that's a draw. That's ordinary income, which is taxed at the full self-employment tax rate of 15 point something percent plus the regular income tax rate. The reason we encourage the use of the S corp is this: if you pay yourself a reasonable salary, and that's a very flexible term, that's the only thing you have to pay the Social Security taxes on. And when you're very tiny, you can even get away for a year or two not doing that. You still take your draw and you still pay tax on the draw, but you protect yourself from the self-employment tax. One of the things that I'm trying to remember now, Michalowicz, the author of Profit First, changes the standard formula of profit equals income minus expenses. And what he says is that income minus profit equals expenses. So by putting profit first, by taking the profits out of the business from the get-go, then what you can control is the expenses. Most people do, as you said, Johnny, they're trying to control their profit. Now, look, I'm not stupid. I know if a guy is just struggling and he's literally using his credit cards to get his next job started, that his profit is going to be all but non-existent. And I generally recommend to people that put aside $10 out of every job you get and put that in your profit account. The point is that you provide yourself with a goal and you provide yourself with something to shoot for. And as you go through the entire formal profit first system, every quarter you distribute money to yourself out of that profit account. And even if all you got in there is enough to go to McDonald's for a Big Mac, then by golly, you get the money out. You go to McDonald's and you celebrate the fact that I've done well enough to be able to buy myself a Big Mac. Next quarter, I'll be able to buy myself a Whopper or whatever it is. The point is, it gives you something physical to strive for. And by taking the profit out first, even if it's small, you see what you got there. Then we can spend all of the time. And again, I'm still an accountant. I still like to look at things like expense control and return on investment and all that kind of stuff. But when you're getting up in the morning as any kind of small businessman, but I think probably especially for a contractor, when you get up in the morning, you're worried about how you're going to get the job done. And if it's just you and two other guys or two other people, you're worried about how can I pay them? And do I have enough material to finish the job? You have all those things on your mind. You don't need to take the time to sit down and talk with your accountant about stuff like return on investment and expense control. You're trying to keep your business going. And so that's the beauty in my mind of using the multiple bank accounts to keep track of where you are.
I like how.
Go ahead.
Yeah, sorry. I like how it simplifies that process. I think contractors, need to understand that if your intention is to not have a job working for somebody and you want to be your own, person and you want to have a business, you're just going to have to put this hat on. It is part of being an entrepreneur. And if you're going to call yourself an entrepreneur, then you're going to need to spend the time and deep dive into the financials and have a better understanding of it. Otherwise, you're setting yourself up for failure. And if that's something that you don't want to do, then being employed is probably the best thing for you. And calling yourself an entrepreneur is, not a good idea just yet, right? So it's just something that they're, we have to just live with the fact that with that title comes these responsibilities.
Oh, the responsibilities are very real. And I could tell you stories, but I won't. But I will tell you this. Every time I speak to a group, I always tell them, I know that everybody in this group right now in their office somewhere has a stack of papers over in a corner or maybe stuck down inside a drawer that they're ignoring because they don't want to have to go deal with it. And it probably includes past due invoices, bank statements, credit card statements, stuff they know that has to be gone through in order to make sense. But by the same token, that's not what they're going to spend time on at 7 o'clock in the morning when they're getting ready to go out and go to work. They want to make sure that they've got what they can do for that day. And so it's a partnership working with an accountant, or just some guys still do it on their own because they can't afford an accountant.
Right.
And that's also an issue. So having an opportunity for stuff like this, some of the things that I do that are educational programs that are available to people can help them get around to the point that they can hire their accountant or whatever. I really am disturbed by accountants that I know of and hear about that basically just say, well, all we do is the numbers. What you do with them is up to you. Or All we do is keep track of stuff. We can't advise you on that. Now, whether that's a marketing ploy on their part to say, well, if you want more stuff, you got to pay more stuff, which I don't disagree with in principle, or whether they really believe that that's all that they're responsible for, that they don't want to take on any kind of business knowledge or give any kind of advice. I used to have a vet that wouldn't give advice about the dog. She'd just tell me what was wrong with the dog, and then I had to decide what needed to be done. That just doesn't seem to make sense to me. If you're holding yourself out as an expert, you should have some expert opinions to share. Anyway,
Yeah.
So that's always a problem for small businesses. And don't have to be contractors. It can be people that are doing any kind of entrepreneurial expansion, even other accountants.
Yeah.
So
I love that, Mike. And I love this conversation about money, because I think that money, as in our personal life, is a portal into a lot of our business. It tells a lot, right? And I think that that's oftentimes there's a subconscious fear of getting clarity on the financial state because we're afraid of what we'll see. Just like in our personal lives, oftentimes people are avoidant about money, right? Because the numbers will talk about what we're spending our time on. The money might talk that we're not charging enough, or, you know, we're charging too high in this area, not getting the jobs. And numbers don't lie, right? Statistics can be misrepresented, but the hard numbers don't lie. And I think that can be a challenging mindset shift and exercise to really face reality head on. So I love this. And kind of piggybacking off of what you were talking about with what you've experienced working with different accountants, I would love for you to speak on what are some good things we can look for in accountants? Where's a good place to start? How do we know that this accountant will help accelerate our business? Those kind of things for somebody who's never gone down this path before.
it's not too different from when you want to find a new doctor. You need to find somebody that will talk to you. You will tell, if you're working well with this person, you will tell your accountant or your tax guy or whatever you want to call it. You will tell that person things that I joke about it. So you'll tell that person things you won't tell your priest or your bartender. Mm-hmm. That person has to know everything about what your business is doing, what you're thinking, what your plans are, what your hopes are. And so if you're going to reveal that kind of stuff, that's not your first interview, but your first interview is, would I be comfortable with this person talking about that kind of stuff? And you can pick up that kind of conversation. I mean, if you talk about some things, maybe you mention a generic problem that you've had in the past, and if they come back at you all judgmental and everything, then well, I probably don't want to talk to this person. But if they come back at you with stuff like, well, we could deal with that by doing this, or we could deal with that by doing the other, that might make you feel more comfortable with that. So by getting a feel for whether this is somebody you can work with is a place to start. Second thing that I think you want to look for is a person that has options. There's a company out there, they're online, they're in California, I can't remember now what they're called, but they charge everybody the same price, $190 a month, and they say they do your books. Well, what they do is they take your QuickBooks feed and they generate a report at the end of every month that pulls that money, those figures out, and gives it to you. And they say that they will give you so much time to talk about stuff. Well, that sounds kind of good, because for $190 a month, that's pretty cheap. In fact, I have difficulty imagining how they can really provide this level of service that they say they do based upon that. But I've not worked with them, nor have I worked with anybody that has worked with them. So I can't say that for sure. They may have 500 people in the Philippines that are making $1 an hour actually doing the work. I don't know.
Yeah.
But my point is, they have a one size fits all solution, and one size doesn't fit all. So when people come to me, I try to find out what they want. Do they want me to do the work? Do they just want me to oversee what they're doing? Do they just want to talk about stuff? Do they just want to get some feedback from somebody that's a disinterested third party? And of course, I have different prices for all those. So a lot of times I'll suggest to people, well, why don't you start out with this program? Because it'll do this, this, and this for you. And as you find stuff out and you get bigger and you need more, then we can grow into that. A lot of it, like I said, so that's one of the things that somebody interviewing a new accountant would want to look for. Another thing you also want to look for is, does that accountant actually do your taxes? I joke with people all the time. We use the word CPA as a generic name for accountants, but not all accountants need to be CPAs. And in fact, many CPAs are extremely specialized in what they do. I do taxes for a lot of people that their CPA sent them to me, not because I do the rest of their work, but I do their taxes. So you might want to find out if that's the case, or do you prefer somebody that does the whole ball of wax? And those are some other things that you want to find out from people. But it's a process. I'm really big on relationships. I'm really big on getting to know people and expanding the understanding that we have of each other over time, instead of trying to come in and say, well, you need this and this, and this is what it costs. Go away. I spoke with a client yesterday. In fact, I'm looking here at a stack of folders. He hasn't had anybody do his stuff for years, and now he's reached a crisis point. And so I agreed to take a look at this and start working on his stuff. But when I came in this morning, I looked and I said, well, what have I gotten myself into now? We'll get it worked out. He's not in a hurry. We've got a couple of months before the tax deadline, the deadline for taxes. So I think we'll be fine. But that's the kind of stuff that happens with people. And the other thing, and Johnny, this is kind of in keeping with what you're asking about, what people should look for. I get asked almost every week. Somebody will come to me and they will say, I haven't filed taxes for 4 or 5 years. Can you help me? And so, yeah, I can. That's why I mentioned I'm an EA, because yeah, I can help you. But the fact that they can go for 4 or 5 years and not file, they haven't been caught yet, but they will. And then they'll be even in a bigger problem. But because people don't pay attention to those things, now they have to find somebody that can deal with those kinds of issues.
Right.
And so that's one of the things I'm not going to say I'm happy to do. But I'm glad to do. A, that's how I make my money. But B, it makes me feel good to get somebody turned around.
Yeah.
I'll tell one more story. I was sitting in my office, this has been years ago, and I got a phone call, and the guy said, Mike, this is so-and-so, I work for such and such. Now, such and such was my client, so-and-so was not. And he said, I work for such and such. And he said, there's an IRS agent here at my place of business confiscating my bank accounts. And I said, oh, really? And he said, yeah. And I said, well, he said, what can I do? And I said, I don't know what you can do. Let me talk to the IRS agent. So the IRS agent got on the phone and he told me what was going on. He said he hadn't filed taxes for 5 years and they were there to seize what they could and so forth. And I said, well, he's kind of up a creek, because the reason it was on a Friday, the reason he was there was because it was his payday and he was there to actually literally take the money out of his pocket. And I said, well, what can we do? And he said, I'll tell you what. He said, I'm still going to freeze his bank accounts. But if you can get me one tax return done in a week, I'll release the accounts if you can promise me to get the other tax returns done by the end of the month. And so I said, yeah, I think we can do that. So to cut the story to an end, we did that. That guy worked with me for years. And just recently, because of a disability, he went on 100% disability income, which means he won't have to file taxes again. And he let me know that because he had been a client that I regularly discharged and got things done. But he sent me the nicest note. And he told me how much he appreciated the fact that I had literally saved his butt, as his note said, and kept him going until he didn't need to worry about it anymore. So that's heartwarming, very satisfying that I was able to help somebody, and I didn't give him a free ride. We just got things organized and got them done, and he was able to do what he needed to do. So people just need to talk to people. I can't be the only nice accountant out there.
Well, I just came to the realization I need to fire my accountant.
I'll cut the part out.
Right? Because I saw his bill and I can't justify it for the life of me. I'm not getting the communication that Mike speaks of.
Yeah.
Well, I'm not cheap. I mean, don't get the impression I am, although I think I'm cheaper than a lot of accountants, but I'm a lot more.
Your value.
But like you said, it's not cheap that I'm looking for. It's relationship, right?
Yeah.
Exactly.
The value.
And
yeah.
I don't mean any disrespect, but accountants aren't always the best at keeping relationships. They have relationships with numbers, not people. So
that's exactly right, Johnny. Most accountants are accountants because they don't want to have to deal
that's
with
exactly right. Yep.
When I was an auditor, the company I worked for bought another company. Of course, in the corporate world, buying other companies is, and at the time I was working in the home office department that handled audits. And so they sent me out to Connecticut to help absorb this other company. And so I went out to the vice president of the company. She had been an employee of the old company. Now she was an employee of my company. And so I went in after 2 or 3 days to talk with her about what I was finding. And she said, "Oh yeah," she said, "you're the auditor with the personality."
Oh,
I said, "Yeah, that's true. That's very true." So I've always remembered that because what Johnny says is true. Most accountants just want to do the numbers so they don't have to do any more than they have to. I've got a client, very nice guy. He has a very good specialized business, but from talking to him, I think that's exactly where he is. He does what he does at arm's length because he doesn't want to have to deal with people any more than necessary.
Yeah.
It doesn't make him bad. It just means that's his personality.
Different. Yeah. And somebody might, it depends on what you want, but Johnny's all about relationship. I would say most of us, I think that I would say most people want that, right? You want to be seen and understood and know that the person has your best interest in mind. So yeah, I love that you provided these really tangible markers, Mike. I know that was something in our first conversation that really struck me is you mentioning the profit first. Like it was just a very value packed 45 minutes. And I remember Mike mentioned like what you should be looking for. And you even mentioned some terms that your accountant should be mentioning, like about depreciation of assets and different things. And I had the same moment, Johnny. I was like, we let her go like a week later. And it's been fine. Like, yeah, it was good. It was a good decision. So yeah, I just appreciate your wealth of knowledge, Mike. And you're so open to share, and that just speaks to your character. So yeah, and you're just really funny. I love going to networking events with you because it's hilarious.
Well, you make my ears burn.
So Mike, I wanted to ask you, and I know this of a lot of contractors, even the larger companies, is that speaking to cash flow, if we have any contractors sticking around this long, because once they start talking about finances, you know how it is, right? But cash flow and profitability. A lot of contractors have contracts that are ongoing, in some cases into the next year, right? Very long. And they don't quite understand what their profits are because they're basing their entire business off of the flow of capital, not necessarily watching the profitability of every single project. And I think a lot of them find, from year to year, that they may look profitable this year, right? But then next year, when projects come to close and another project's in its starting phase, all of a sudden they're in, capital, restraint. So how, are they looking at a 5-year time frame? Like, how can they better manage their cash flow and have an understanding of whether or not they are profitable at all?
Well, there's 2 or 3 ways to go about this. One of the ways to go about this is to understand the difference between cash accounting and accrual accounting. And I'm not going to go too deep in the woods
Right.
there, even though that's something I could talk about all day long. But the purpose of accrual accounting is to allow you to understand what the totality of the financial picture of the business is, even though things are in motion. The value of the business accrues, which is where the accrual
Right.
comes from. And we see that when we look at a balance sheet, when we look down at the retained earnings, that's the actual profit of the business. Now, if you're in a cash situation, that just amounts to the amount of money you've got left over at the end of the year. That's difficult to understand for many people because they're more accustomed to understanding things based on, if I pull out money out of my pocket, do I have $10 or do I have $100? And that's how they look at business. The profit first system is an attempt to deal with that by kind of merging the two. And we merge the two at one point, and that is in the profit account. So if I'm putting aside a fixed percentage of the money that comes in into my profit account every time I get money, every check I get, every time I allocate money, that percentage goes into the profit account. So that's the cash flow piece of it. But remember, I also said that every quarter you distribute some of that money. Typically, what you distribute is half, and you leave the other half in the account to remain there. It has a variety of purposes, but essentially, it's the same thing as the retained earnings on the formal balance sheet. Now, I'm not saying that the two numbers should look identical. In fact, they probably never will. But psychologically, it's the same approach, because as you follow the profit first system, then you see that money remains in your profit account and presumably gets larger as the business goes along. So if I've just had 4 big projects and I made $100 on 3 of them, but I lost $100 on the 4th one, now I know that I'm $200 to the good. So in this very simplified category, I should have $200 still in my profit account because I put that money aside as the money flowed through. If I'm working with my accountant and we're going over the formal financial statement, I should be able to track that through the retained earnings on the balance sheet. The distributions that I take out of the profit account would also be represented on the balance sheet by the distributions I've taken in the business. And that's where the two points of view come together, because that, I think, makes it easier for someone who doesn't have an accountant's twisted mind to see the money is actually there, rather than just having somebody sitting across the desk from them and pointing to it on the sheets, because it's the same thing as the guy that I talked about before. To explain why it's still true makes their eyes spin and doesn't really help what they need to know. The other thing is that because they know that there's cash in that profit account, they also know one of the purposes of profit is to help the business grow. And that becomes a source of cash that doesn't require credit card or a bank loan or anything else.
Right.
So again, it's something physical that they can see. It may only be $200 if they're new or if things haven't gone well. It may be $20,000. But the fact is, it's something tangible. And I think an awful lot of contractors much prefer a tangible thing than something on a piece of paper. Probably because they work with their hands, because they create things, they see things that they make, so they want to see the profits come to them that way as well. It's probably why they are prone to have boats and stuff like that, but that's over on the personal side, and that's an altogether different thing. We're talking business here. We're not talking personal finance.
Of course.
And that's also important. Your profits also fund your personal wealth, but your personal wealth is not your business wealth. And so many people I talk to take the approach that if their business is doing well, then they're doing well. Maybe, maybe not,
Yeah.
because the two things are different. They should be different. That's why when you talk to somebody that's a serial entrepreneur, because they're drawing money from multiple streams of income, that's money that comes to them. It's not money that goes to the business necessarily. And sometimes that's difficult for guys and gals in any kind of business to realize. I do not do personal financial planning. I'm not authorized to do so, but I can certainly direct you or direct a person to things that make sense. You've all seen the disclaimers that all of us financial people have to do.
Of course. Of course.
Yeah.
So anyway,
Well, I don't think we have too much time to get into that anyways.
no, probably not. But so, and yet, what else?
Yeah.
I mean, I can go down a path if you want, but
Yeah, no. I just wanted to, I know I'm putting you on the spot, Chloe, but I just wanted, because I can't see you, I just want to make sure you have the opportunity to ask any questions or provide any input if you want to. No pressure.
Okay. I don't think I have anything that's super pressing. I'm a little curious what some of the other benefits are of an S corp, especially compared to like a C corp, because I know my business is a C corp right now.
right. But may I speak about your business? Okay.
Yeah.
Your business is a C corp because it has to be. Your
Okay.
situation is one that is specifically requires a C corp.
Okay.
So that's not, now if you wanted to start another business outside of what you're doing, then I could go on about the S corp. Here's the advantages to an S corp. The tax advantages are real. I've regularly saved people $8,000 or $10,000 a year in taxes by getting them out of that self-employment tax thing. But there's a lot of other advantages as well, not necessarily related to the S, but also related to the corp. A corporation in the United States is a separate entity. It is a different person than you or any of the other shareholders in that business. You may be the only shareholder, but that doesn't matter. It's still a separate business. So or separate entity. So one of the primary advantages to that is that it helps you protect your personal assets.
Mhm.
If the corporation owns the asset, then you don't own it. Now, there's some things you have to be sure are happening to be able to defend that position, but that's first and foremost. When people go out and form LLCs, they do it because their business advisor, Google, has told them that an LLC will protect their personal assets, and it can. A corporation can protect your personal assets too, but the corporation can do, but the fact that it's a corporation can do more than that. One of the things that I have worked with people about are folks that have had their business for some years and now they want to get out of it, and the kids are willing to take it over, but they don't know how to transfer it over to the kids, and they don't know how to keep from having to pay a big tax bill for the transfer and so forth. A corporation setup, an S corporation setup, makes that relatively easy because you have a corporation and you can simply sell the shares of stock that you own to your kids. And when you sell them to your kids, they can pay you back by borrowing money from you to pay you back. And so then we have an installment loan agreement that allows the money to be parceled out over years. That's your income for retirement that you're paying for year after year. Instead of if the business is worth $1.5 million, you don't have to pay taxes on $1.5 million all in 1 year. Now, the thing that we do have to be careful about, and I'm going to a seminar in 2 weeks about this issue, is the fact that if you don't structure the sale right, the IRS will still consider it an all-at-once sale instead of an installment sale. So, well, I'm not a lawyer, so I didn't do that for them, but they assure me that their lawyer has assured them that we've structured this in a way that will let them to do that legally. But if it wasn't a corporation, it wouldn't even be a possibility. So that's an advantage. Another advantage is if you want to bring somebody else on or have somebody leave but not close the whole business, Again, since it's a corporation, there are shares. And so the shares can make those changes. An S Corp has the additional advantage that at least under the current tax code, there's an earned income, qualified business income deduction. And it can be as much as 20% of the business's income that can be a deduction on the individuals that own the corporation, if it's an S Corp. Same deduction applies to partnerships and sole proprietors, but it's something that an S Corp also has. A C Corp doesn't have that opportunity. So most of these things have to do with the fact that it is a separate entity and is governed by the same, another nice thing, an LLC, a single member LLC is treated as a sole proprietorship, which means you pay self-employment tax. If the single member of that LLC is an S Corp, there is no self-employment tax because there's no employment tax to pay for a corporation. So if you structure your business so that even if you have a subsidiary, the subsidiary is owned by the S Corp, you pay the self-employment tax as well. And you can combine everything into one tax return so that you're only paying taxes on one thing. Now, since all of that goes to the S Corp, then when the S Corp reports its income to its shareholders, that's where the tax hits. Johnny, I wish I could tell you something about Canadian taxes. I have no idea whether there's anything like that in Canada or not. I used to have a computer guy that I worked with. He was in Ottawa, I think, and we talked about taxes, and he even said, "Could you do my taxes?" And I said, "Well, let me look into it." And I started getting into it. I said, "No, I don't think so. The expense for me to be able to do that for you is far more than you'd want to pay me for." So,
oh, absolutely, yeah. There's no sense in paying you to learn our tax
Exactly.
code. I know there's a lot of similarities, but it's definitely more expensive to have a corporation in Canada. But
Okay.
well, the other thing is about, and remember this about corporations. Corporations are governed by individual states. So each state may have slight differences. And one of the things I work with clients sometimes that are in the real estate business, and they want to organize companies in Montana or in Nevada or in Florida because their corporate rules and their tax laws are slightly different. That's a whole other issue. But the reason I bring that up is this. The IRS does not have any control over corporations. They only have control over how corporations are taxed. And so that's why we have the rules that an S corporation is taxed as a corporation, but a partnership and an LLC is taxed like a sole proprietorship. So that's something that a lot of times I have a client that came to me and said, "Well, we're just going to set up our business in Montana." And I said, "Okay, that's fine." They said, "Can you help me?" And I said, "Yeah, but how are you going to set up your business? Do you have an attorney or somebody out there?" "Well, I don't know." And I said, "Well, there's got to be somebody resident in the state you want the corporation to be in to be the registered agent." "Oh, didn't know that." So anyway, they went on down the road. Whether they actually did anything, I cannot tell you. But I have done that. I had some clients in New Zealand 5 or 10 years ago. It was around 2008, because they came to me because after the real estate collapse here, there were a lot of opportunities for people to buy properties in the US, and it was an advantage for New Zealand law. So we set up some corporations in Montana and places like that. I had some connections and we got those things done. So it's doable, but I'm not sure that's really helpful. So I don't know. Like I said, I could go on and on.
Mm-hmm. That's fascinating because, yeah, we'll see, especially in real estate, like you mentioned, you'll see, like I know with my husband's tree business, you'll get a call for somebody for this lot, but the number is like Pennsylvania or something. And I always wondered about how that gets set up. So very fascinating. We have about 5 minutes left, Mike. So give us a 2-minute, you've given us so much. So I'll say this, is there anything else you want to leave us with? Anything else you want people to remember?
If you have any questions, get in touch with me. I'll be glad to answer your questions. If it develops into a business relationship, that's fine. I mean, I welcome it, but I'm not saying this for the purpose of enticing you to start a business relationship. As you can tell, I like to talk. and I like to share what I know. So I'll be more than happy to talk with you about something that you have going on that you wonder about. The other thing I will offer is every Tuesday at noon, I do a thing called a weekly workshop. It's on Zoom. If you want to jot this down and join me today, you go to https://mcw.bz/weekly. And this week we're talking about, actually we're talking about corporate entities, because I want to talk about the issue of a new law that goes into effect in January, requiring the beneficial owner of any corporation to be registered with the IRS. But that has a whole other section, and it has to do with what we talked about with Chloe on the personal assets and so forth. And so I'll be talking about that today. But any Tuesday at noon, I talk. Sometimes people join me and they interact. Sometimes everybody's too busy and I just keep the recording, which I share out. So that's available too. I like people to know that I'm at their service because I enjoy what I do.
That's great, Mike.
So,
yeah. And the Profit First book is something that's definitely going to get a read or a listen to while I'm driving.
There's also a Profit First for contractors.
Yeah,
I like that.
really
Okay,
good. Because there's some adjustments, I think, with cost of goods sold that it was helpful. Yeah. I can include those. I'll make sure to include those.
For the author's name, and I don't have my
Sean Van Dyke.
I'm sorry.
Sean Van Dyke is the one for contract. Yeah.
Got it.
Beautiful.
All
Awesome.
right.
Cool.
Well, thank you so much, Mike. Here, let me stop the recording.